Talk to me about the realities of business structuring. A lot of people, particularly when they decide they're going to give it a go, right? I'm going to go all out. I'm going to start my music business. I'm going to make it official, quit my job, whatever. Got to start my LLC. You hear that a lot.
It's becoming
we have them, but our LLC is the only structure? Certainly not.
Right.
But why might not that be a good idea?
Well, all right, it depends, right? For example, LLCs are perhaps one of the easiest to form, but so are S corps and so are C corps. You will go through the same process in terms of incorporation, and it's really based on the insight, right? What I mean by the insight, meaning what is the end vision, right? Oftentimes, if you were to sit down with me to have a consultation about what are my next steps, I've gone through those steps and processes, or any accountant, CPA, or attorney, the conversation should start off as, what is your vision? What is the end goal? And then let's work backwards. Okay. Right? It's almost like someone who's baking a pie, right? Or making a cake. Right. You start with the ingredients first. And if you know that you're baking, you start first with the type of pie. If I'm baking a strawberry pie, strawberry cake, then I don't need pecans. That better helps you understand what you need, and then it'll take you a lot less time to get to your goals. Start with that, and then make adjustments as you need. LLCs have become the most popular structure simply because word of mouth conversation. I don't know, and the unfortunate thing, and the truth behind it is that LLCs have created more issues for tax professionals, CPAs, and the IRS, which is when you hear them saying that they've hired 400,000 agents, it's to look into these LLCs. Okay. Honestly, because typically most corporations or incorporated entities, period, have a concept called the corporate veil, where you kind of default or you forfeit your corporate veil when you do things by treating the corporation or the entity like it's no more different than you. The whole point of incorporating is to have an entity that is completely separate from you, right? But with regards to the music industry, a lot of people set up LLCs, and I would say if you're in the music industry, it depends. If you're a musician, maybe LLC. But if you're an artist and you have expectations of royalties, you may need to look at the Sam Cooke format. You may need to be a C corp, right? Okay. And the reason behind being a C corp is the ability to be able to control, when those royalties are recognized as revenue and therefore become taxable. If you go back and you look at Sam Cooke before he passed away, and I've had this conversation, and he was brilliant from a business. If you want to model yourself, he's just one of many people who've come along in the music industry who just had a high sense of understanding of the business side behind music. And if you look at how he structured himself, he was a C corp, right? And his shares belonged to himself, his wife, and a small percentage to the accountant. Now, because his wife didn't fully understand what he was doing, unfortunately, when he passed, she sold those shares, I think, for $45,000-$50,000, and the company itself owned the rights to all of his music. Oh, wow. Right? So every time you hear "I was born," that the royalties go to the entity, not to the individual. And what it allowed him to do is, if you get it, let's say you get $100,000 royalty check, technically, it gave him the ability to defer some parts of it and recognize a smaller percentage of revenue, legally. And so he paid lower taxes. That was the whole point. He only dispersed a small amount of revenue to himself and his wife. Now, the CPA who set that stuff up for him understood it, purchased it dirt cheap from his wife, and him and his family now continuously reap the royalties from that. Wow. So, but there's a bad lesson. There's a lesson to be learned from that, but there's also a lesson to be learned in the fact that it's important to understand both aspects of your creative side, but also understand the aspects of the business. Right. It is a business.
Yeah. So if I make $100,000 on my latest album release, right? Or if I get paid $100,000 for, you know, performing at someone's birthday party, whatever. What is the first thing you suggest from the financial management perspective? What should I do with those funds, considering taxation?
Considering taxation. Well, let's first talk about it. If you get $100,000 and you're a single member LLC, that's why I said these LLCs are creating problems. If you get $100,000 and you're a single member LLC, you're gonna recognize 100% of that $100,000, right? If you get $100,000 and it's an advance, and it's any other type of entity, any other form of entity where you're saying that, hey, they're paying me, it's a performance-based type revenue, which means that I recognize the revenue as I perform, right? As I meet the obligation, then you've just delayed the recognition of the tax. You know what I'm saying? We need to understand that. But
okay. Yeah, but break it down a little bit further.
Okay. Depending on your structure, right? Let's say you're a single member LLC, which is apparently everybody's saying that once you get an LLC, apparently banks start running after you and you get a whole bunch of money. And, you know, the money that you couldn't get when you were when you were an individual, all of a sudden,
not incorporated, right?
Not incorporated. All of a sudden, it comes out of the sky. That's not true. Okay. And all of a sudden, there's all these tax advantages that you could benefit from. That's also not true. Again, we have to maintain the understanding of the corporate veil, because if you don't and you pierce it, here's what the IRS will view you no more so different than the entity. In other words, they're saying there's not enough evidence here to support the fact that you incorporated. You and the business share the same bank account. You all participate in the same transactions. Wow, your rent is being paid from this business bank account. Your personal expenses are being paid. So they're not. And here's the danger of that, more so than the IRS, right? The IRS is the big one, but the second one also is you're dealing in the entertainment business. You deal a lot with intellectual property. Right? So how you set yourself up becomes extremely important. Let's say, for example, you decide that you're an artist and you write a song. You're convinced 110% that it's unique, specific to you. Some time down the line, another producer comes in and say, no, you've actually copied. That's copyright infringement. Right? Yep. If you're not set up the right way, there is no, and I've worked on cases where you had this exact same thing happen, right? You had someone who set themselves up as an LLC. They never separated their personal expenses from the business expenses. And the first thing the court or the other side did is they said, we want to petition for bank statements. And they petitioned for bank statements and were able to prove that the individual and the entity were not actually two separate entities. Right. So they were able to sue him for both the assets in the business as well as go after his personal assets. Wow. So it's extremely important that people who are in the music industry understand that how you set your stuff up is extremely, extremely important. Yeah. It's not just about the tax benefits. It's also about wanting to protect your brand. It's about wanting to protect your personal assets. And it's also about wanting to protect your longevity in future. So does that answer
so you're a proponent of, back to that 100,000 again, you're a proponent of, I'm assuming, setting aside a certain amount for taxes. For taxes.
Absolutely.
Paying yourself first as well, like making sure that you don't, like Sam Cooke didn't just let all the money stay in the business account, but he also didn't take all of it out either, because he made it.
He had to live.
Yeah, you got to live. So you got to find a way to, it's called budgeting, right? Figuring out what the business needs, versus what you need.
Right. That takes discipline, right? So when you talk about, we can go back to 100,000. When you talk about what to do with 100,000 in a large scheme of business appears to be a lot of money, but you and I know that's that's equipment.
It used to be, right?
It used to be, right. But $100,000 is a material amount of money if you know what to do with it. Right. And absolutely, there's a certain amount that should be set aside for yourself. You pay yourself first, always. Right?
Yeah, for any dollar, right? Not just 100,000, but
period. Any denomination of money.
Right. Yeah.
You pay yourself first, but there's also, again, remember we talked about those liabilities or contingent liabilities on money. $100,000 is not really $100,000. So you got to break out what's really truly yours, and then pay yourself from that. Right. So it's $100,000 is not $100,000 net. I would say sit down and talk to someone about what your potential tax liability would be on $100,000. Definitely pay yourself, pay a good accountant or a good attorney or a good to help you get what you need to get and not mess yourself up. If to me, it's called the test of the little, right? If you don't know what to do with $100,000 and properly appropriate that to create additional resources, the problem will only compound when you get $100 million. It doesn't stop. It's about knowing what to do with whatever it is that's given to you and then moving forward with that. The principles are universal and consistent, and technically they're biblical. Right. You know what I mean?
So sweating the small stuff, it's not just a saying that goes a long way.
It does.
And also qualifies you for more. So for those listening, obviously, a lot of times the opportunities that you get or the ones that you're in right now may not be the ones that you dream of. Right. But this is a recurring theme on Musically Hitched.
Yes.
That one show leads to another.
Absolutely.
One person leads to another.
Absolutely.
Your reputation precedes you. It gets there before you do.
Yes.
And so when you don't take care of the small things, it seems like the big things never come. They just elude you.
Well, yeah, the big things are, it's a pipe dream to think that if you can't handle coming to rehearsal while being in a band, right? That obligation. You'll never be able to understand the obligation that it takes somebody like a Beyonce or a bigger performer to perform, because they have to, regardless of if you hear them say these people are divas, blah, 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 they understand the core aspect of business. I can guarantee you if somebody's paying them X millions of dollars, they're going to be there on time. Right. So it's about that. But that came as a result of coming to the shows where they were paying you $1,000 or $100, whatever it is. Right. It's building on that. You know what I mean? You have to have a foundation. And if you don't have that, you don't have something to look back on and say, you know what, I remember when I was faithful with coming to a $100,000, a $10 show. So it's precepts. Precepts.
Yeah, and the behaviors that you learn along the way. So again, back to almost the beginning of the episode where we talked about the realities of keeping track of things, like learning to do that on this level. Will help you to understand, even if it's no longer you doing it and you have a team of accountants, business managers that are keeping up. I believe as an entrepreneur, it's very important to know the systems. You create the systems, right, first of all.
Of course.
But you need to know how they work,
right,
so that you'll know whether people are operating the proper. Because you might need a new manager, right, to help you execute. Because these things were not even being done to the level of excellence that you used to do them to, before you hired the help. Now that you can afford it.
No, there is no. In business, there is no not knowing. You get what I mean?
Yeah, you're gonna be punished.
You're gonna be punished. Not knowing. So even if no one is calling for you to be an expert, but you have to be willing to take the time that it takes. Or hire people that you trust, and then hire people behind the people that you trust to make sure that the people that you hire are doing the right thing.
Expert at hiring the expert. Right?
Exactly. And that's perfectly fine. That's completely understandable. In any business, it makes sense to do that, man.
What's up, everybody? Thanks for tuning in to part 3 with Daniel Vildor. Chock full of information. There was some straight up nuggets in there that I'm sure that you enjoyed. Make sure that you hit that subscribe button so you stay locked in. Get your notifications turned on. You don't want to miss a thing. If you're on Apple, be sure to hit the plus button and follow there too. See you soon. Supporting this podcast is easy. Just hit the subscribe button. See you on the next episode.